Hey guys, welcome to Joy of the Trade. It's been a wild week in the stock market. We had the Fed say things like, we're progressing and seeing progress on inflation. Uh, we're thinking about thinking, and bullshit like that, nonsense. Tiptoeing, dancing around the elephant in the room, which is inflation. You feel inflation, I feel inflation. Try buying a car, try buying a house, try renting an apartment, try filling your gas tank, try going to the grocery store. It's everywhere. So they're sitting here and they're saying, no chance. We're starting to think about it. It might be there, it might not be. We don't know. This is our first time doing this. He literally said, Jay Powell, at his post-Federal Reserve release press conference, that we've never had a pandemic before. There's no real manuscript on doing this. They're flying by the seat of their pants. Give them a break. Well, yeah, we'll give you a break, but don't pretend like nothing's happening when we all know something's happening. But I digress. So that message has created a huge instability in all kinds of things, like the Treasury yield curve. You've seen a big rotation in different stock sectors out of the reflation trade and into growth. So let me show you a couple of these things that I'm looking at and some opportunities that I think might be out there. So this is the first thing that I think is potentially like, and this is the VXX. So this is a VIX ETF. It's an ETN, actually. It's an electronic trading note. I don't love this product. I think it's something you can trade, though, for a couple of weeks. And it's built to reflect the VIX. And there's been huge pressure on it, made new lows the other day. And you could see the VIX here spikes, right? So this morning is trading around 32.75. And when you see the VIX is starting to make a move back north of 20, the last time this thing had a spike in May, we had a spike in the VIX with volatility. This VXX traded in as high as almost $50. So you're looking at $17. You're looking at almost a 50% opportunity if this move happens, if this move really, really happens. And you don't see that too often. I mean, if we look back over time, this thing, even with the VIX, like the VIX in the steady 20s, this thing was $90, $100. So this VXX is trading at 1/3, and there's some cheap calls out there in this thing because everyone's afraid of buying volatility right now because the entire financial planet is a volatility seller. Maybe take a little bit of dough, a long shot, and hedge yourself on your tail risk that some crazy stuff happens, and we have the markets just go haywire because the Fed is just flying by the seat of their pants and they don't really have anything under control. But let me show you something else here that's kind of interesting. So this is very interesting, actually. So this is the 10-year note. So they came out on Wednesday afternoon. We saw this thing, 10-year yield, rip up to like 160, which was the 50-day moving average. The next day, filled that move back to the downside. It was a big open goal for everybody to go buy growth tech stocks, which for me in the short run made sense, but in the long run is totally insane. If the Fed is seeing inflation, if they're hinting that they might have gotten this thing wrong, I think the last thing you're going to want to be in is in growth. So you're starting to see this tick back up. If we get the really underpriced insane move that could happen, that would catch everybody so off sides because they've been flipped around, would be the yields to rip back up here and the dollar to keep going. That would be a disaster for NASDAQ. That would be a disaster for growth. You would see commodities probably stabilize a little bit after they've sold off. And those are the things I'm looking at. So the big thing you really have to pay attention to is the VIX north of 20, and US 10-year above 150 is going to put some pressure on NASDAQ, and it's going to be something to pay attention to. So just a couple of notes, just a couple of things I'm sharing, where my head's at. I have to take my glasses up to look at the screen. Post-Fed. Late June is always historically like a really, really bearish time. So decrease how much money you got in the market, decrease your trading size if you're actively trading, and just wait, because there's a possibility that we get a bit more of a volatile type of tape than we've had. So LFG guys, if you like this video, like it on YouTube. If you haven't already, join wealthpress.com. We put out videos like this all the time. I'll be back next week. Take it easy.